Hello and welcome again to Money Talks with me, George Pitcher, and a warm welcome as ever to Edmund Shing from the Opportunity Idle Investor Fund and the forthcoming Idle Investor book, which we're much looking forward to, Ed. Ed, you write about the prospects for the Eurozone this week, a Grexit. Is that so? Is Greece really going to leave?
Well, I think, George, what is surprising is both Greece and the EU have let it get this far. I think actually the chance of Greece leaving the Eurozone is not far away from 50% right now.
Really?
That bad? Oh, yes. Yes, because let's face it, Greece is about to run out of money. That's the bottom line. And so they need more money. And the only ones about to give them any money were the International Monetary Fund and the European Union. But of course, without an adequate reform plan in place, they said, absolutely no way we're giving you, Greece, any more money unless you agree to our terms.
And the worst news will be for the Greeks themselves. I mean, that must be terrible for the Greek economy, isn't it?
Absolutely. I mean, the Greek people, those with substantial investments, have been taking their money out of Greek banks in droves and presumably hiding them elsewhere in the Eurozone, maybe in Germany or France or wherever. But certainly the amount of so-called capital flight, money leaving Greece, has been colossal.
So in effect, it's a self-fulfilling prophecy. The very warnings that there might be a Grexit will lead to a Grexit.
Absolutely, because it becomes self-reinforcing, as you say. The more likely it becomes, the more worried people become, the more money gets taken out, and therefore the more likely still an eventual Greek exit does become.
Presumably this could cause a sort of domino effect. What likelihood then of Britain leaving the European Union?
That's the risk, George, because politicians will do what politicians want to do. We are now at election time. We have four odd weeks to go to the election. Of course, those who are Eurosceptic on the Conservative Party, and more importantly UKIP, are going to, of course, make hay. Because they're going to say, look at the European Union, what a mess it is. Why on earth do we want to stay with these guys? Frankly, we'd be better off without them. It's only going to give more grist to the mill.
And would that actually be as terrible for the UK economy as you're implying an exit would be terrible for Greece?
I'm not sure it would be equally as bad. I mean, it wouldn't be catastrophic for the British economy, but I think it actually would be a big negative because remember, our biggest trading partner is the rest of the European Union. So from a trade point of view, it might become more difficult were we to leave the European Union. We don't really know on what terms we could carry on that trade. I think the real risk would be that a lot of companies which are headquartered in the UK might say, well, actually, you're outside of the European Union, we do a lot of our trade in the European Union, we'd prefer to be headquartered inside the European Union, and they might move somewhere else. I think somewhere like Dublin, for instance, would be a very easy choice to make.
So the €64 million question, how do we make money out of the possibility of Britain leaving the European Union, Ed?
Well, I think in the short term, no one's going to make any money because I think the volatility that would be engendered in financial markets generally could be quite painful for stock markets across Europe. But I think in the longer term, if we're talking about the risk of a Brexit, Britain leaving the EU, then actually Ireland would be, in my view, the obvious beneficiary. Companies such as Smurfit Kappa, which is a packaging and paper company in Ireland, or even Ryanair for the transport, because guess what? If you move a lot of the financial centre, a lot of companies headquartered in Dublin, there'll be a lot more flights, or a lot more people wanting to take flights in and out of Dublin.
So thanks very much, Ed, writing on the wall for Greece, and if the domino effect causes the UK to look like it might be leaving the European Union, that might be a fillip for investors in Ireland. One to watch there. Thank you very much, Ed. Look forward to seeing you again soon, and thank you very much for watching Money Talks.